we saw today?
Well, we mentioned that the turnaround in the market medium term is going to come from policy responses, and some hopes around that has really seen a turnaround, especially in terms of the US markets overnight, which were down 0.9% at one stage. They've managed to finish the session quite flat, and it does look like hopes are building around that G7 conference call that is on tonight, so that's going to be watched very closely, and also Germany bucking into the pressure on those euro bonds. So hopes of that response really helping markets around the region. Our market outperforming though, and that was due to the rate cut. It was mostly baked into the pie, but some calls for that 50 basis point rise, as well as some stragglers with a hold recommendation on those interest rates. But altogether, the market rising 1.5%, and that means we're pretty much back where we were Monday morning. $4.2 billion worth of stock being traded, so volumes were still relatively light. But if we have a look around the sectors, it was those areas which were beaten down yesterday. Yesterday, energy was the worst sector. Today, a massive performance, up by 2.7%. In fact, Woodside Petroleum was up by around about 4%. We also saw the materials and the financials with a strong bounce back, up around about 2%. And of course, we got some economic reads around the region as well. We saw the China HSBC Services Index. That saw a gain to 54.7. So that, I guess, relieves some of those negative thoughts around China. And of course, that RBA rate move also helping, but all eyes now really on that G7 conference call and then the ECB meeting on Wednesday.
That equity reaction, were there any sort of particular sectors that stood out? I mean, looking at the close, the banks, some of the better performers, and certainly closed near those highs.
The banks did well, and we heard from Bank of Queensland. And I guess the big question now is how much of that rate cut, the 25 basis points, will be passed on by the Big Four banks. We've also seen Bank of Queensland coming out and cutting its standard variable rate by 20 basis points. So it's going to be interesting over the next couple of sessions to see how much the Big Four banks will cut, and that's going to be a key as well. But all up, the Australian market seeing a positive impact out of that interest rate decision, and I think it was more a case of helping market sentiment, and certainly that 25 basis point cut helped market sentiment. We have a look at how the currency traded, though a little bit more volatile, and you can see that on the chart of the day. Initially a big drop down, but once again it's had a positive impact on the Aussie dollar. And
look, got to talk about Qantas. We're going to be talking a little bit later about it in the show, but Julia, look, this kind of market, not the kind of market you want to be announcing bad news, even though it was a bit of an updated date, particularly when you start giving profit warnings down of about 91%.
James, I just want to point out that Qantas is the latest in these cyclical stocks that has come out with a downgrade. We've heard of a profit downgrade from Qantas today, but back in May we saw profit downgrades coming through from the likes of Toll Holdings as well as Myer. And of course in April we saw profit downgrades coming through from the likes of JB Hi-Fi, from Boral and Seven West Media. So it does look like the cyclical area of the economy is still suffering. Of course with Qantas we know that its domestic airlines are doing well, and in fact still predicting an improvement in their domestic operations, but their international operations being weighed down by the UK and the European markets, and that 91% predicted fall in underlying profit to $50 to $100 million is way off consensus, which stood at $282 million. So no surprises that Qantas did fall, but it was a massive fall today. We saw the shares falling almost 19% to an all-time record low. So unfortunately, confidence being worn away, and that's despite some of the optimism that had started to creep into the stock after the separation of the international and domestic airlines, on hopes that they'll see a strategic partner come through on the domestic side. But it does look like it's Virgin that's managed to see that strategic stake coming through, and that's from Etihad, which had a 3.96% stake purchased in Virgin on the open market, and hoping to get that up to 10%. So unfortunately, not a good day for Qantas shareholders.